Earlier this month, Ford was put on a negative outlook by S&P, leaving the issuer teetering in the edge of investment grade. So, no better thing than having Joel Levington, senior credit analyst for Autos, here to explain what could be the impacts, where are the bonds trading. So, Joel, what has been the impact for the bonds and how does it compare with GM and the rest of the sector?
Yeah, thanks so much, Renato. Ford's bonds always trade a little bit wide, and that reflects the higher level of issuance that they have relative to the broader consumer discretionary market. Now, S&P's move to negative in February pushed their spreads out an extra 10 to 15 basis points against GM, and now they're roughly about 60 to 60 basis points wide of their main rival across the curve. Now, relative to the broader consumer space, Ford's bonds are now trading like double B to double B minus issuers. We view the front end of Ford's curve as having a mix of wide spreads and limited exposure in the event of a ratings cut, but that's really not our expectation for this year.
Right. So, taking into account what could be historical ratings drivers and the current company's fundamentals, does it really have high yield metrics? Can it reach profitability targets to remain IG?
Yeah, that's a great question. And I would say, we went back and looked at 20 years of data, including two chunkings into high yield and also two increases back to investment grade. And really, I think the key takeaways is that the raters really look for an EBIT margin minimum of about 4% and 1% for free cash flow margin. Our analysis suggests that the free cash flow margin target is both achievable in 25 and 26, but the margin has very little margin in terms of room for safety relative to S&P's trigger point. Luckily, the rater has said that they will wait until they think about 2027 before taking in action, which gives Ford some time to prove that they can achieve what consensus expects.
Sure. I guess one of the other considerations is that Ford as an issuer is not necessarily a small issuer. So what do you think would be the impact if it would really get back into high yield for a third time unlucky?
Yeah, no, you're totally right. If they go into high yield for a third time, they would be the largest issuer, bigger than Charter or CSC. And so all high yield accounts are going to need to own the name, which is a clear technical positive. Maybe the other data point that I would give you, Renato, is that if you look back at what happened to Ford's bonds when they were junked in 2020, you'll see that they ripped much tighter to the BA index or the double B index, outperforming by about 300 basis points over 2 years. Now, why did that happen? It's not really from operational performance, but because if you think about the high yield portfolio manager, what he's looking for or what she's looking for are highly liquid bonds, an issuer that wants to be investment grade, and a reason for it not to go in an parent's balance sheet. And Ford kind of ticks all those boxes. So I guess one man's loss is another man's gain in that scenario.
Pretty much. So thank you so much, Joel. A word of just to remember everyone out there that you can follow Joel's research on his bio page at bio Joel Levington that you can see under his name. And also remember that if you have a terminal, you have all of Bloomberg intelligence, which means you can reach out to the analysts one-to-one and keep the conversation going. Joel, that was super interesting. Thank you so much and see you again soon.
Thank you.